Hey, this is Jim DuBos, and thanks for joining me on this episode of The Launch Capsule. This is the second part of a two-part series on the 7 stages that every business goes through. So in these stages, we're going to look at the end of the life cycle journey within the business itself and the outcomes that are going to be required. And so I really look forward to going through this journey with you. So let's get started.
Welcome to the Launch Capsule with your host, James DuBos. Buckle up because your launch capsule begins now.
Liftoff. We have a liftoff.
Okay, so now we're going to go into stage 5, which is I'll call it maturity stage. And I'm going to refer to one of the greatest investors, certainly in my lifetime, is Warren Buffett. He had this quote: "Business schools reward difficult, complex behavior more than simple behavior, but simple behavior is more effective." And so this is really where I'd like to just call it the big leagues. You've got market share, you have some brand equity, and honestly, you have the potential for complexity. And so you're focusing on optimization, you're thinking about margin protection in the business, you're thinking about strategic positioning. In some ways, you might be deciding what not to do, right? You don't want to invest in the wrong thing. The core component here, in my own experience with my companies, is you must have an innovative mindset year over year. Because if you're not thinking about innovating within your business, you're going to become irrelevant. Look at taxis compared to Uber as a simple example. In some ways, you're starting to plan like a public company. It may be that you have an annual strategic plan, but you have a multi-year strategy. You probably have a board of advisors and a board of directors beyond just the investor community. You're also looking at competitive analysis. So it's going to be more of a global sense, regardless of the markets that you play in. You're going to be looking at some innovation pipelines. And quite frankly, there may be regulatory components of your business that you have to consider. One of the things that I like to do in my companies is to use a tried and true analysis tool, SWOT, right? Strengths, weaknesses, opportunities, and threats. But what I like to do in the company was apply those on a per functional area of the business: sales, marketing, operations, HR, finance, and so forth. So here's some examples of things that I would look at. In the sales, I would be looking at new market opportunities. Those are strengths. Legacy client dependencies, weaknesses, potential supply chain disruption, right? Upcoming trends. What are the trends in my industry, and where are those opportunities for me to go execute against? And then what are the competitive pressures, the threats? If I look at marketing, I'm looking at things like brand perception, lead quality, campaign fatigue, new media or channels. In the operational part of the business, I'm looking at efficiency. I'm looking at any potential scalability limits. Do I have any vendor risk, supplier risk within the operational function of the business? And do I have any technology debt in the business? Technology is a life cycle. And so that can be what I like to call a deferred maintenance item if you're not careful. And it can also be, quite frankly, a cash suck on the business if you're not paying attention. HR. I want to look at my cultural strengths and weaknesses. I want to look at leadership gaps. Again, looking at future talent and ultimately turnover risk. Key employee loss can be very expensive and time consuming. And so you want to be able to evaluate your teams on a consistent basis. Obviously, in the financials, I'm looking at stability. I'm looking at cash efficiency. I'm looking at regulatory exposure. I'm looking at capital expenditures and options, debt service coverages, and those kinds of things. So by doing these functional SWOT, it's a way to sharpen your team and the leadership within the team without you having to get into the weeds and doing it yourself. You're kind of making them, if you will, self-aware. The way you as the founder or ownership team would think about their functional area and allowing them to take on some of that responsibility. Because really this is about being adaptive and nimble in a highly competitive market that you're operating in. Some of the milestones that I like to look at are things like market share, the margin mix within the business. If I have an innovative uh, initiative, what's my success rate? And fundamentally, I'm looking at enterprise value of the business. How is my enterprise value growing in the company? Okay, now on to stage 6. And stage 6 is what I like to call a replication stage. And this is the place where I'm either replicating systems, processes, and people for organic growth, and or I'm looking at inorganic growth, which is where the M&A opportunity or option for growth comes in. Zig Ziglar had a great quote, "You don't build a business, you build people and they build the business," which is 100% truth in my own personal experience. Because really what you're doing is you're not just scaling the machine, you're cloning it. So the best way to think about a clone is, I'll call it adjacent markets, or new markets that you're going to bring this well-oiled machine into a net new market with potential total customer acquisition. And so you're looking at your model and you're going to expand. So expanding doesn't mean blowing it up. So again, I think another way to maybe say this is you're either going to compound, right? I'm going to compound with a new market, or I could potentially collapse. And so you have to be sure that the systems, the processes, the tools, the people are ready to level up. They're ready for you to bolt on a new market and go after a net new customer acquisition strategy. So some of the financial milestones that I like to think about here is you're basically going from around that $50 million range with predictable contribution of margin by unit, right? Or by the segment itself. 20% plus EBITDA sustained across all your entities, a strong balance sheet, cash reserves, strategic, I'll say plays with your cash. Obviously clean, auditable financials across all the business units within the company. Some of the operational KPIs that I would suggest that I've personally used: revenue per head. It's an efficiency across all locations. You should have an expectation based upon new markets as you go into them. Again, the contribution margin by product or by acquisition. Another thing that sometimes entrepreneurs don't think about is the span of control. What is the leadership capacity that I have during growth to be sure that I have enough people and the right people in the organization? And then percentage of systems or processes that are standardized across the unit. It's really critical, because what you're doing here is you're looking for the measurement of repeatable muscle memory of the systems and processes across the company, because it's really critical for any organic or inorganic growth in the company to have that high percentage of repeatability in the company. Now, I'm going to do a separate podcast episode on mergers and acquisitions and the strategies that have been, I'll say, applied to me when I'm exiting the business, as well as consideration if you're going to use this as a growth strategy for replication of the business. The last stage is really this, I'll call, exit stage or transition stage. If you want to have a great exit strategy, you have to have a legacy plan for the team that's helped you bring the business to this point. So it's not really the end of the business, it's simply the evolution. In my own exits, as I've exited the different companies, it's always, I'll say, been about a transition from entrepreneur ownership, traditionally being either a strategic acquisition or a growth type acquisition, in transition for the legacy team. And so it was a way to go from, I'll call it's emotional. So when you sell, you have a transition to new ownership. When you go employee owned, you're transitioning from that founder led, founder owned to the team owning it, or it's a transition within your family. And I would just say that every one of these takes years of preparation. You have to be prepared financially, obviously, to attain the target, the goal that you have as a financial target. But you also have to be ready operationally, because a new buyer or a new team of managers have to have confidence that the business can exist without you, the founder or founder team. And then ultimately, you have to be prepared emotionally. And so you're going to be designing this exit, in my view, years in advance. You're not deciding this overnight. And so your planning shifts really towards positioning towards your strengths. You're focusing on reducing the owner dependence. The cap table has to be cleaned up. You're designing, quite frankly, an attraction to your business and the ability for a smooth transition. Some of the key things that I think are critical for an exit, you have to think about and identify the ideal exit path. Is it a strategic sale? Is it private equity? Is it ESOP? Is it a family transition? What's that ideal exit? And start preparing for that today. The second is, you're going to need a team of advisors, and you're going to have legal, you're going to have tax, you're going to have an M&A in order to structure this properly. You want to build that leadership bench so that that business runs without you. Fundamentally, you're going to align the exit strategy with your personal, financial, and lifestyle goals. And then finally, you're going to prepare, I'll call it the data, right? The financials, the contracts, the org chart, intellectual property, all the things associated. And I have a dedicated program that I run for entrepreneurs who are preparing to exit, where I take them through the entire life cycle of preparation for an acquisition or transaction. Something to think about if you're planning a family or internal succession. You're going to be grooming the next generation of leaders, and you have to start that early. You have to think about the development plans and the mentorship programs that you need based upon the individual characteristics of the people that you think are going to execute those roles in the future. And you want to set clear roles. You want to have expectations. You want to set timelines. If you're going to sell the business, you're going to be maximizing profitability. You're going to stabilize growth. And you're looking at the ability to transfer this asset to a buyer in a very low risk way, where they feel confident they can hit their internal rate of returns, their return on investment, without a lot of risk. So the importance around the narrative, around the market opportunity, and the advantages that you possess. One guy expressed it, you have to have meat on the bone. You have to demonstrate the ability to continue to progress forward. You're going to build relationship over time with potential acquirers before you need them. It's one of the things that I learned in my own journey across my exits, is typically having an awareness of the people who are in the market making acquisitions and building relationships, and the things that were important to them will help you in this structuring process, in your mental framework as you get ready. Some of the financial milestones that you'll have to consider are, you have to have audited, clean financials, minimum 3 years. you have to have strong profitability multiples. And taking a look at your industry standard profitability and how are you meeting or exceeding those industry standards. You need to think about your valuation strategy because there's lots of different ways to value a business. And there's different models, there's different standard models that are out there that people are going to apply to your business. And so by understanding those models and understanding the valuations that come out of those models, we'll start to build a framework for you financially on how you want to approach a potential sale. Obviously, some of the KPIs that I like to think about in this stage are the owner involvement score, right? You want the need for the owners, the entrepreneurs, to be present and there pretty low. Business needs to be able to execute without you. You need to have a readiness for the due diligence process that you're going to undergo in these transactions. You're not going to get to an 8-figure transaction or even a high 7-figure transaction without a tremendous amount of due diligence. And that's part of my 90-day program that I run because I want the entrepreneur and the team to be prepared for what's going to come at them as they go through this journey. You need to be able to demonstrate profitability and year-over-year growth, consistency, and then also have a pipeline of potential buyers and advisors. In the last transaction that we did, as we decided to go through this journey, the initial IOI process or indicator of interest process that we ran generated over 65 potential buyers to the funnel. And so it was a very interesting process. And so by generating I'll say it, a large pool of potential candidates really gave us options as we went through this journey. And so, look, I want to tell you thank you for your time. I know this has been a longer episode of the Launch Capsule. I try to keep things within 10, 15, 20 minutes. But I felt like it was really important to walk through these different stages of business. And no matter where you are in the stage life cycle of your company, the key is really just knowing where you are. What is the next level going to demand of you? And planning is not going to be a one size fits all, right? But I think it's important as you go through these stages. In the beginning, it's quick, right? A little chaotic. Towards the latter parts, it starts to be very structured and strategic in order for you to achieve the long-term goals that you have as an entrepreneur. Thank you so much for joining me on this episode of the Launch Capsule. I really appreciate it. I hope you have an awesome day. If any of you have any questions or comments, please reach out to me. I can be reached at entrepreneurship@dubos.me. So again, have an awesome day, and I wish you the best.
That's a wrap for today's episode of The Launch Capsule. The Launch Capsule. With your host and mentor to success, James DuBos. If you enjoyed today's episode, don't forget to subscribe and share.